Today I have with me Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund right here in our studios to talk about. So a lot of news flow is flowing in. Sunil, thank you very much for your time. Let's understand what's happening in the market. There is some amount of expectation in the industry that some help from the government will be welcome because the numbers, the data shows that there is definitely genuine stress. How much of that positive news, if any, comes from the government side in form of help is already in the price in your view?
I don't think it's really much in the price yet, because I think government so far has not indicated any way in the direction in which they are headed. And to me, I think what the government will do also is quite different from what the market is expecting. I think what the government will do is try to restore consumer sentiment towards purchasing rather than help the supply side of the auto sector or the NBFC sector. Because I think that's the thing which is hurting the economy. Because if you look at it, I think rural economy has been suffering from two things. Very persistent low inflation, especially driven by the food inflation being very low, which has hurt their sentiment. Second is government, through its earlier infrastructure program, was creating a lot of income in the rural and semi-urban area, which was driving consumption. Since, because of the election and the run-up to the election, the government's infrastructure spend has slowed down dramatically. So that had led to some kind of a drop in income from the non-farm sector, and last year's monsoon wasn't great. So I think that's where consumer sentiment is affected, and I think I would like the government to actually do stuff to revive consumer sentiment, which will automatically then spill over into demand for auto or FMCG or whatever. So rather than give sops for the auto industry or whatever, I think government's effort should be to improve consumer sentiment, and second is, and this could be through MSP, a reassurance on the MFP front, maybe increase that a bit. Second is bank credit. They announced a lot of budget steps to promote bank credit, equity infusion, NBFC lending. There are certain waivers. I would like the government to actually follow through on that, because bank credit, as it steps in and fills up the NBFC gap, it will also support.
In fact, we have seen some amount of transmission already started happening. Today, SBI cut deposit rates on bulk as well and retail. So there's part of transmission happen. But one thing is being observed in the market, the broader markets have actually taken the larger knock. But the SIP flows into the market continue to remain very healthy. We understand you have just come back after a tour of the entire country marketing your new NFO.
Yes.
Tell us, what are you picking on ground? What is driving people, or what is assuring them that they are not discontinuing the SIP so far assured about it?
I think what is, if you really ask me the answer, it's the confidence in Mr. Modi. I think that ultimately at a ground level, consumer level, they are confident that India has good times. There's a lot of trust in Modi and the government. And I think the recent stock market correction, while advisors and distributors are a little bit concerned because they don't know how to face their customer with a negative SIP after years, at the ground customer level, right, they are not so much worried. Yes, definitely they are concerned, but I think they see that the future. And I think the industry has also done a good job of marketing the fact that in this time of stock market correction, all those SIP installments are actually going to be the multibagger SIP installments which will deliver value. So while some amount of credit should be given to the industry also for proper communication in terms of the SIP as a product, the rupee cost averaging benefit, and like I said, ultimately the political results showed you that people trust Mr. Modi. So I think naturally a spillover in terms of what they do with the financial actions. What the customers are not doing, in fact, actually is that because they are saving, they are not spending. So it's also a point that would you rather customers spend that money, because that will have a multiplier effect in the economy, or save it and give it. So at the cost of being selfish in the industry and wanting more flows, the fact is that capital creation, true capital creation will happen when a consumer spends. The American economy is a consumption-driven economy.
Fair point. Now, talk to us, Sunil, how have the flows been lately in your small and mid-cap funds? Because earlier, of course, now you are a full-fledged house with all kinds of funds, but there was a time the big reputation got made because of your outstanding work in small and mid-cap as a house. Which continues to remain the favorite for the investor.
Yes.
So tell us how it has been, because that has been the largest hit in the market.
Yes, but I think that you see about 70% of our SIP flows are coming into our mid-cap and small-cap funds. Wow. So in this time, I'm actually buying. So I think that could be the best for the SIP investors, that actually I'm not facing a huge redemption pressure, but I'm actually getting fresh cash into my fund, and I'm actually able to buy the right quality stocks. So for me, Ajay, this correction, because it is not driven by the actual fundamental outlook of these companies, but driven by the sentimental approach, is actually a big buying opportunity. Sure. And I'm consistently buying stocks in this downfall.
Right. So earlier we were discussing, Sunil, that the industry has been hit, the economy. How much time, forget about the market for a second, but how much time will it take for economy to come back on its feet when the transmission actually starts going in the lower lending rates for corporates, MSME, and for consumer people who want to buy on credit? And how many quarters more that lower cost of borrowing will start impacting and triggering economic growth?
So I see two inflection points here, Ajay. One is a domestic inflection point, and second is a international inflection point, right? So I would see that in about 3 quarters, you will see the domestic inflection point starting, because I think that this festival season, combined with the news of a better monsoon, will help to clear most of the auto stock pile-up which has happened, right? And that with bank transmission also will help to clear up. So I think in 3 quarters from now, you'll be at a situation where all the pains have been absorbed domestically, and fresh buying into fresh thing will start. At the same time, India is not isolated from the world. While among the emerging markets, we are the ones most having a domestic economy support from the outside world, that is America, Europe. You need them to buy things from India. Sure. That is our export industry, right? That I will say the inflation will probably come closer to the last quarter of next year, because I think Mr. Trump's actions are largely driven by his desire to ensure his re-election.
Sure.
So I think that December 2020 election point will be an inflection point for the world, because I see a more inclusive, more interdependent America.
Right.
Because that's the natural economic order of the world.
Right. So you'll stay with me. I've got a big exclusive from my colleague in Delhi. Nayanthara Rai is gathering some exclusive details about how PMO has been appraised with the situation, and a presentation has been made. Nayanthara, tell us what exactly is the Finmin submitted the presentation about to the PMO?
If I knew about that presentation, I wouldn't be a journalist. I would probably be in the government. But jokes aside, it was ET Now that on August 2nd reported how the Prime Minister's office had swung into action, was very seriously asking about the FPI surcharge, the massive sell-off, the erosion in market capitalization, all of that. Today, we understand from our sources that after a slew of meetings chaired by Nirmala Sitharaman with industry, a presentation has indeed been submitted by the Finance Ministry to the Prime Minister's office with suggestions for policy intervention to revive the economy. We understand that the policy interventions covers capital markets, auto sector, real estate, as well as SMEs. I'll repeat that for the benefit of our viewers. Capital markets, auto, real estate and SMEs. These are policy intervention measures as suggested by the Finance Ministry and with their implications, particularly for the capital markets. The FPI surcharge, we understand, is very much part of that presentation. There was unintended and therefore it needs to be corrected. But to woo back investments, North Block has also made a case for coming out with other measures to convince the foreign investors, to convince the market participants that Dalal Street is indeed the place to be. And that's why it has also suggested tweaks in the long-term capital gains. Having said that, this is a decision that has to be taken by the highest office that we have in the government, by the Prime Minister's office. The Prime Minister himself, of course, traveling. We've been seeing his photographs in France. He'll be back on 26th of August. So till then, I don't think the markets should be expecting a decision. But when he returns, Nirmala Sitharaman, the Finance Minister, will still be on a roadshow, meeting with industry on allegations of tax terrorism, understanding their problems, etc. So as far as the policy interventions go, nothing perhaps before 26th of August. Maybe the government will want to wait for the roadshows to also end. But like I said, as far as the markets go, yes, suggestions have been made, a presentation has been submitted, and let's see what Narendra Modi's office decides.
So that was, of course, the big exclusive from Delhi, that do not expect anything immediate in the near term, but it is in the works and the ball is rolling, probably something after 26th when the Prime Minister returns back to the country. Sunil, you heard my colleague talk about the areas which are there on their radar. If indeed this actually comes about, how do you think the market will read it in the next 1 week or so?
I think there will be a brilliant rally because there are three key points there which I like. First is that the admission that this FPI tax was unintended. That I think will go a long way to assuaging foreign investors as the government really welcomes foreign capital. So I think that, because earlier remember the retrospective taxation, the LTCC implication had created a negative impression. So I think this is a big statement to say it was unintended, so can we tweak it? So I think that's an admission which will help a long way FPI coming back in. Second is real estate and SME are the two biggest employment generators in the country. So I think Mr. Modi with an eye on the larger population, because this employment generation will, like I said earlier in the talk with you Ajay, that consumer sentiment in terms of purchasing has to revive, and that can only employ when there is casual labor employment which happens in the MSME and the thing. So I think the big positive, and that LTCG tweak, anything you tweak to a retail equity investor, he is going to be very happy. Right. So I would say that these are very positive steps where the government, without specifying auto as an industry, is actually helping all the auto ancillaries who are MSMEs. That's so correct. You see, that's a good way, because otherwise government suit boot ki sarkar, somebody will say they are helping this, the profit is private but losses are public kind of a statement. So this is a good via media for the government to say MSME, in which a lot of auto ancillaries will get covered and this employment generation, and with that thing, I think will lead to a very positive sentiment. So I do hope they actually follow through and this is not just rumor, and that the facts come out this way.
All right, Sunil, we hope so that as well. Thank you very much for your time today. That was Sunil Subramaniam of Sundaram Mutual.